Look at the 10-year Treasury yield. It's higher after today's jobs report. The Bureau of Labor Statistics reporting 199,000 non-farm payrolls were added in the month of November, and that was higher than the estimate of 190,000. All of this coming at a crucial time for the Fed, just days before it reconvenes for its final rate decision of the year. Joining us now to break down the data is CEA Chair Jared Bernstein. Chair Bernstein, good to see you. There's a lot to like.
Sarah.
A lot to like in this report for investors, for I'm sure you guys at the White House, higher participation, lower unemployment rate, higher wages. Does this come as a surprise so far into the Fed tightening cycle?
Good question, which I'll answer in a sec. First, let me add another group for whom this is good news, and that's working Americans. I mean, that's really who we're here for. And when we have the kind of a tailwind that you're seeing here, as you correctly pointed out, this isn't just a monthly result. We've been running these really strong job growth reports for month after month, over 14 million jobs since this president got here. I don't think you mentioned the unemployment rate ticked down to 3.7%. So we now have 22 months in a row with the unemployment rate below 4%. Now, we don't have inflation yet for November, but we know that year over year pay was up 4%, and that's, my guess is that will beat November inflation, so that will be another month of real wage gains. That helps to put a tailwind in consumer spending, which is, of course, 70% of our economy. And this kind of perpetual motion machine has been belying predictions about the economy falling off a cliff. And, that momentum is good to see.
Yeah, but does it worry you at all for an administration that's really trying hard to fight inflation to see this kind of strength at this point in the cycle, especially with the bigger jump month to month on wages?
So the best indicator of inflation is inflation. And inflation in the PCE was, which is the index the Fed watches most closely, was 0 in October. And, of course, the CPI is down about 2/3 off of its peak. And the reasons for that, I think, are pretty knowable. I wouldn't call it particularly immaculate. I'd call it a normalization of supply chains, helping to really take down goods inflation. We know that there's been some easing off of rents, and that enters the CPI with about a 10-month lag. So we're seeing that happen on the shelter part. And as the job market has cooled, and it has cooled, it's an important point here. We've seen a slower nominal wage growth, and that means a lot for services inflation. So the general forecast, if you talk to market forecasters, is that this easing in inflation should continue.
Hey, Jared, to your point, I mean, core PCE 6-month annualized is running 2.5. We know what oil's done and what impact that'll have on headline CPI. I think it was the B of A chief this week who said maybe we need to start thinking about not overdoing the fight on inflation. When do you think the conversation pivots that way?
Well, that kind of gets into the Fed's knitting in a way that I don't want to do. I think respecting their independence has always been one of our #1 priorities, in fact, in fighting inflation. But let me talk a little bit about the way I think consumers are experiencing this. I want to read you a sentence from another report that came out this morning. This is the University of Michigan Survey of Consumers, okay? So the first sentence in the summary is, consumer sentiment soared 13% in December, erasing all declines from the previous 4 months, primarily on the basis of improvements in the expected trajectory of inflation. So one thing that speaks to your question is that inflation expectations have generally stayed pretty intact during this period. And, our theory of the case has long been that if we can keep moving in the right direction, easing costs, slower inflation while maintaining a tight job market, promoting real wage gains, sentiment would start to improve. Now, this is one preliminary report. I don't want to over-torque on it, but it's certainly a move in that direction.